So we'll start recording. Got a few emails to go through, not as many as yesterday, but we'll get into them. First one was a question about the Aussie CAD. After today's webinar, he said I found an entry on the 4-hour a couple of days ago. And the email basically goes on the difference of the 4-hour between eSignal and AxiTrader. I pretty much use AxiTrader solely now for the shorter term. Well, I'd always defer to AxiTrader for the shorter term anyway. eSignal I generally use for the longer term because you get more data in terms of going back beyond 6 years, I think MetaTrader has. So I use eSignal to get that longer term data in there, and I refer to AxiTrader for the formation of the most current bars, whether it be in the last sort of 10 bars on a daily, or what you can see on the screen on the daily, and certainly on the shorter time frame. Going on the 4-hour, you'll see the difference between eSignal and MetaTrader is quite stark, so I definitely always use AxiTrader. There's another email a bit later on about that, so I'll cover that one as well. In the fact that the eSignal had a different bar formation on the dollar CAD, and compared to had a different formation on the dollar CAD than it did to eSignal. Again, I would always refer to MetaTrader or Axi as the market to do your order management on, whether it's entry or trailing stops or targets. I'd always defer to the order management, the MetaTrader then rather than eSignal. Another email is questioning the importance of monthly and weekly charts, those longer term time frames, and goes on about that spreadsheet that I showed you from one of our prop traders and what he looks for in terms of getting ready, and looking at the monthly sort of analysis. What he does is not necessarily what you need to do. It's certainly not. I don't look at the monthly for ring lows or that, or the cyclicity. I don't even look at the cyclicity on the weekly. I don't look at the moving averages on the. I look at the 200 on the monthly and the weekly, but that's it. Because I see the 200 as more as a support and resistance line than anything else. So that's focus on that rather than looking at the order of the moving averages on the monthly chart. So it's not everybody's different. Everybody has their own approach to the market, and there's no right or wrong in what he's done. And if you're not doing it, there's as I said, it's up to you as an individual. If that's the way you approach it, that's fabulous. If not, then there's no drama. But you should be looking at the longer time frames, certainly for your support and resistance lines, because you can see more of the information. And it's easier to pick up those stronger turning points when you look at the longer time frames. Pound Aussie. A couple of questions about this on the head and shoulder formation. So let's have a look at it. Here you got the head, the left shoulder rising up, coming back to the right shoulder. The right shoulder here obviously hasn't broken that neckline yet, and that's a rather strong support line. So there's your neckline. It's had a little false break over the last couple of days on the Aussie strength, but you would not be. You could even probably put that in there. Get these two touches. I would not be looking at this as a retest or as a break just yet. And momentum's down on the lower side, so we've got less room to go on the downside than we do on the upside. Where's our RSI? RSI is at 45, so it's almost in the middle, but Is this a head and shoulder pattern? Yes, a lot of the Aussie crosses have that kind of formation, and it certainly looks like a head and shoulder pattern. Will it prove to be a significant chart pattern in the future? It's hard to tell at this stage. I'm still bullish pound. Aussie, I'm ambivalent. It's certainly strong in the last couple of weeks, but it's or stronger in the last couple of weeks, but in reality, it hasn't really gone anywhere. Look at the Aussie. The last couple of weeks has come off the sort of 89 area, 88 area, and it's just sort of floating around between 89 and 90, not really doing much at all. So I'm not sort of, as I said, I'm ambivalent about the Aussie. Maybe a little bullish. We're getting a little higher highs here and higher lows. Tend to be sort of more on the buyer side than the seller side. From a fundamental standpoint, though, I prefer to be on the short side. So I'm ambivalent about the Aussie, but I'm definitely still bullish the pound. So I'd be looking to take this higher. If there's, we now have two days of buying, so there might be an opportunity tomorrow if there's if this remains as a buyer bar, bouncing off this support line again for the third time, trying to take that higher again. Is the right shoulder too far away? Is the right shoulder too far away from here? No, not necessarily. If we do get a cycle and a retest under this, obviously, then all bets are off, and I'll become a bear with everybody else. But at this point, I'm still on the buy side of this. So, got someone looking at the pound Kiwi. We've got that. Yep, we've got your fib in the right place. That's fabulous. You've got a support line. It needs to be strong. Certainly, we're in the fib extensions, and we do have that divergence there. So that's looking pretty good for a trade. We can see that divergence from this low to this low, and that's sort of Class C. What is 90? 9.6 and 9.0, so it's slightly higher. Is that a strong horizontal though? Not ideal. Yeah, you'd say the stronger the horizontal is down here at 89, which is still 400 points away. If you go up that low there, you can see it's only really had a couple of turning points. Might be strong enough, worth 0.25% at the end of this bar. Certainly not a trade you'll be placing today. It's a trade you'll be placing in the morning. Okay. Can you go your thoughts on dollar CAD now? It's broken out of its range. Do we wait for a retest of resistance, or look to get in at a lower toe funds to participate? Dollar CAD. There is not much resistance up here until we get into the $1.16 area, but it has broken out of this sort of trend line here. It held that for a couple of hours, and that's about it. And do you want to participate at this point when RSI is up here at 73? We're getting close to overbought. You might get maybe 50 or 60 pips out of it, and even on the 4 hour, is that there's nothing there yet. It hasn't come back to the moving average. So there's no participation at this stage. in the dollar CAD, either on the shorter time frames or looking to trade the reversal, the trend reversal. So that one's sitting on the sidelines at the time being. The question on the Aussie dollar is that the neckline has offered no support. No, it hasn't. It broke straight through that thanks to FOMC. We test back to the 50 EMA and a swing. Can we still participate, or are we solely waiting on that neckline to be tested? No, as I said in my report, I'm not sure how strong this is anymore. It's sort of broken it. It's not really, I don't think of any significance anymore because it's gone through and tested it, and this time it made a higher high. It's only because Yellen ruined the party that if they turned around so strongly. If you get a swing low here, or it's buying off the 50 EMA with a support line, then there's a potential to take this trade and not worry about the head and shoulder reversal pattern at this stage. Okay. Right. I have a few questions on pending orders and head and shoulder analysis. Euro yen 4 hour and okay. I still think there's an entry here on the daily. The sellers haven't run away, and we're still sitting here in the area that we'd like to get long. So I'll be looking at taking that long later today if it breaks a new high. If it breaks through all of, across here at 142 is my entry. Alright, so let's go to your analysis and see what you're looking at. This is the 4 hour. I thought you said you had a daily here. Okay, so here's the daily. Higher highs and higher lows. EMA support, horizontal support, bullish. Victor tracing trend line, no resistance. I'm about to see a price for all the stuff you got on here. Alright, could you look at the 4 hour and see if I'm looking at it in relationship to that in the right way? Yes, you are. Looking at the daily and then coming back into the 4 hour, and your daily looks good. Which one is it? There's your daily. You've done the daily analysis, and that's great. You recognise the entry, and then gone to the 4 hour. I'm just looking for that buying action, which we're starting to see now on the 4 hour. So that's all good, mate. High highs, high lows is what we want to see. Pound Swiss range reversals. Is this a range, the Pound Swiss? Well, in this, you need the last significant uptrend. You could be looking at that for your fib extensions, or you could be looking even just at that, which is not as strong because it's phase 2 and phase 1. So this is the Fibonacci odd place, and we've got the 2 there offering clear support. And unfortunately, that bar there makes it the risk reward not really worth it. you're looking at about 120 pips for 120 pips. I don't think that's a worthwhile trade. But let's look at yours. I mean, on the euro yen, I mean on the daily. Looking at it as a daily, I had the order in at 142 above this bar. I've replaced it, or I will once this webinar is over. Replace it above here on 142 again. So it breaks through all these highs. I want to be in the trade because the analysis I did 2 days ago, it's still there. This bar is not much of a bar. Then we get another inside bar. So yes, it's double inside bars effectively, but I'm seeing this is where I want to see the buying momentum, and if it breaks through 142, then we've got that, and I want to take that acceleration away from the moving average. Pound Swiss. So you're seeing this as a range trade. You've got your fib from there. As I said, I think this is phase 2. That's phase 1. Not that all that valid. And it's this move that you're wanting to, pick up on. You've got the divergence there, and even bullish hidden divergence. Is it a range trade? I don't think so, but personally, but if you're seeing it as that, that's fine. You can take it as a range trade. And yeah, it's this little phase 2 here that you would be measuring on your fib. Pound Aussie, trading a head and shoulder pattern. Well, yeah, that's your head and shoulders, yes. There's your neckline, or so to speak. It's actually this one here. It's from that before it makes the head and after it makes the head is the neckline. Yeah. Otherwise, you've got another head and shoulder pattern in here. Yeah. With shoulder, head, shoulder is potentially there, but this in the larger thing, that's your head and shoulder, and the neckline is from here to here. You want to see it broken. Some people do trade the break of the neckline. I prefer to trade the retest. Okay. I feel like it seems that there's a contradiction to taking a long trade because the right shoulder is at lower high, suggesting it might be switching to the short side. Well, that's what head and shoulders patterns are. This is a reversal of trend pattern. Head and shoulders are reversal of trend. So, this you're looking. This is if it breaks this neckline, it's a trade to go short. The right shoulder is a lower high. No, the right shoulder is a higher high. Well, that's your left shoulder. That's your right shoulder. You're not looking at a mirror. This is as you looking at the back of somebody's head. So that's your left shoulder and that's your right shoulder. And you can't really say it's making higher highs and higher lows at this point for a trend continuation trade. According to our prop rules, you must be having higher highs and higher lows, and we're not exactly getting that. This certainly looks a lot weaker than it does stronger. So even though I am bullish the pound and ambivalent the Aussie, then I'll be waiting for this trend to start and then going in on the shorter time frames. Because in shorter time frames you can get out earlier too if it fails to make this high and does break down. You're out earlier than you would be on the daily. So yeah, at this point I think that we could be breaking this, but I don't see that happening from a fundamental point of view. But we can't be saying on our checklist, as you pointed out, there are no higher highs, higher lows, so there's no entry on the out sort of analysis either. Okay, so and then You're good today, only one chart. Euro Aussie. You are making, this cycle broke down, and once we had a lower low here, you could say that this trend was broken. Then we sort of fart-assed about, and we're now sort of potentially making cycles a bit like the Aussie dollar is making little cycles of higher highs and higher lows in an attempt to make re-engage in a new uptrend. That's based on the Aussie being what those lines are. Based on the Aussie weakness, which kind of not really seen, but is the euro stronger? Well, yeah, it has been stronger in the last couple. You can see that clear uptrend, whilst the Aussie hasn't been trending as fast. So back to the euro Aussie, we're getting higher highs and higher lows in a new uptrend since basically mid-Feb. Yes, it's not a huge uptrend by any standard, but it is slowly creeping higher. You looking at it, yesterday was an inside bar and the previous day was not exactly a low test, but then it seems like a good setup to me. If I had two options of looking at it. Okay, so let's have a look at option one. Option one is, this is an entry off an inside bar. I'll take half the position on the break of this inside and the remainder of the break of the previous bar. Okay, break of that bar there. Interesting. Okay. Yeah, we're sort of slowly inching higher, and that's your target up there. Fair enough. You're going to jump in, hidden divergence there. Jump in on a bit here and then a bit on the next one. Fair enough. And so what's your second option? If you're going off this trend line, surely you'd be looking at that's your, I don't know how far back that trend line goes, and my MetaTrader won't go back that far, but I would have set that's your phase 2 there, and then this is just a bit of noise. Well, this is why you don't put a target on. That'll be my only, is you don't have a target on it. You've got to take profit level 57. I would not have that in there, or certainly on one of them maybe you do and the other one you don't, to get the option that it's going to continue up into 64 or this upper channel line. Yeah, that'd be the way I'd approach that. So, you guys got any other questions? Because that's all the emails I've got. Disappointingly, I'm not getting many emails, and I'll say that when I email it out, but I'm not getting many emails from the new group, the latest group of people. So I'll have a go at them and say, where's your analysis? But unless you guys have got any questions for me, so I do get one gold norm. At what point do we not email in? You don't have to email in. It's just, the latest group I had, which was only last week, back in Sydney, I haven't heard anything from any of them. I've got one email from one of them. Either they know it, they think they know everything, or I did such a good job at teaching that they don't need to send me info. What are you doing online, Vanessa? Bulls and Bears Part 3, I can't find it either. The bloke who obviously has the DVD hasn't put it up yet, and there's been a couple of comments on the YouTube thing as to what it's where is it. We are still practicing. Okay. Well, show me your practice. You're not going to unless you get feedback from me. How do you know you're doing right or wrong? And that's my point. And not everybody's obviously online or even watching these Q&A, so I'll email them. And tell them that they've got to. Well, they don't have to send the stuff in, and to Thomas's question, at what point do we not email in? Is you don't have to email in if you've got questions or you want assistance. You think you're not reading it right, your account's struggling, and you want some help. That's what these sessions are for. So if you're bubbling along and making some good profit, and you don't need my help, then I don't need to hear from you. Right, so Pound Cad, missed the beginning of today's session at Woolies buying chocolate. Mate, come on. Have you talked about Pound Cad? No. Does that count as a bounce off in the F50 EMA for a long setup? Ooh, that is a good question. It's also broken that immediate resistance line there as well. So you could. My only thing here is 350 pip. That's a big risk in pips. So you need at least a 700 plus pip run to make it worthwhile. And is that the answer to the question is, technically it is a setup. Fundamentally, do we have that kind of my data doesn't go back that far. Fundamentally, do we have that kind of 800 pip run in it? Quite possibly. Quite possibly. I'd prefer to sort of jump in on the lower time frames if there's an opportunity. Get a little pullback on the 4 hour and have a look at it there rather than run a 350 pip stop on it. But yes, we're certainly getting a bounce off the moving average, and it's something that you should consider. You got to bounce off the 50 fib as well, so it's just, to me, 350 pip stop is getting a little on the larger side. Do you think that US will lose their position as a base currency? Never. Well, I shouldn't say never, but no, not in the next 10, 20 years. I can't see that. Maybe in 20 or 30 years, once China has established itself and the perception of their corruption is not, well, the US is pretty corrupt as well, but as long as people believe in the safety of holding Chinese assets, potentially you could get that as a replacement of the reserve currency. But the US as the world's reserve currency is nowhere near under threat. Okay. So that's it for the day, guys. I'll get this up on YouTube, and I shall talk to you. If I'll fire you off an email, you might find it interesting. Okay, right here. Fundamental view on FOMC and Yellen's speech. Did you not read my email, the market report? The tapering was well expected, but what wasn't expected was her view that interest rates are going to be, or the FOMC's view that interest rates are going to be moving in 6 months after they finish tapering, and tapering is only 10 billion a month. It's only 5 months away, so that puts interest rate hikes in 12-month window. I don't know if that's going to be the case. They bullshit a lot, and but the market certainly took it as that, and that's why the US dollar, um, ran hard because money poured into the US bond market. Whether or not that, I don't see them raising rates this time next year. Um, I just don't see that happening at all. Pound US, when would you be looking for a long continuation, as it looks like it's come off the 618 fib? Yep. There's the Bank of England before Auntie Yellen had her say. The Bank of England came out and said, things are looking pretty rosy for them, and it was starting to push up off that $1.66 support line. It was looking pretty good as an entry. In here I would have been, had the FOMC not been out, I would have been looking at that little swing low there above the support line. With the Muppet she is, it ruined the idea. So at this point in time, I need to see more buying, so I'm sitting on the fence until that happens. But it should come. I do believe in the in this as a long-term sort of trend. I think we will be getting to see $1.70. That's 1.7. We will be seeing 1.7 at sometime in this year, if not before the end of the financial year. Yeah. So we're certainly down in the oversold area already. It'd be nice to get in on the shorter time frame, but that's not going to happen with this kind of action, massive bar. You're not going to trade against that at this point in time. You wait for the that to come out, that momentum, all that selling pressure to come out of the market. So it's patience, people, patience. Okay. All right, guys. Well, we're back on tomorrow morning, so I shall see you all then. Good chat.